and welcome to the ninth episode of the D91 Labs Idea Series. This is a series where we invite founders, researchers, and practitioners to share with us ideas on how to improve financial inclusion in India. For a moment, I would like everybody to take a trip down memory lane and revisit one of the game-changing moments of our financial journey when we started to use UPI apps on our phones. It was convenient, simple, and had a pretty flat learning curve for most of us in this room, as well as for many of our listeners right now. Fast forwarding to today, the use of UPI is steadily growing due to its interoperability and zero charges involved for the end user. It is also widely accepted by users and small to large merchants. But have we ever thought if UPI was designed to be inclusive? For instance, before asking our house help if they accept their salary through UPI, have we ever stopped to think if their adoption curve of UPI is any different than ours? In today's episode, we have Beni and Srikara from Dvara's Future of Finance initiative, who have delved deep into understanding the new-to-UPI users' experience. I am Monami Dasgupta, your host for this episode of D91 Labs Idea Series. We have with us today Beni Chugh, who manages the research at the Future of Finance initiative. Her work focuses on identifying systematic stability and consumer protection concerns in digital finance. She also contributes to the social protection open digital ecosystem workstream at Dvara Research, which focuses on designing and implementing citizen-centric digital social protection delivery platforms. Srikara Prasad is a research associate with the Future of Finance initiative. His work in the past 3 years has focused on helping create safer, more accessible, and more trustworthy digital financial services in India. Dvara Research, on the other hand, is an independent, non-partisan, not-for-profit policy research institution based in India. Its mission is to ensure that every low-income household and every small enterprise has complete access to digital financial services and social security through a range of channels that enable them to use these services securely and confidently. Welcome to the Idea Series, Beni and Srikara. Okay, so moving on to this conversation, Beni and Srikara, we know in the past few years that in India, UPI is making unprecedented progress in facilitating peer-to-peer or peer-to-merchants, which we also call as P2P or P2M, and many other forms of digital payments. But progress in fintech is not always inclusive. And we know this from your recent study. So Dwara's recent study is on understanding new-to-UPI users' experience with UPI-based digital payment apps. It also touches upon the various factors under this study through a multi-stage project, which is in collaboration with WhatsApp Pay and CSBC. Could you elaborate on the motivations behind the study?
Thanks, Monami. I think I can't say it any better than you already have. UPI is skyrocketing. I think the recent numbers are too big for me to even kind of write down on paper, but they're in the neighborhood of 800 crores. That's January monthly payments made on UPI. And obviously, UPI is one of the most kind of bespoke payment systems in the world. So there's this whole kind of it's a great validation of how an idea created for India is now taking up. But what we really wanted to understand was what is the reach of UPI? In the last 2 years, consistently, I think the pandemic also kind of contributed to that. We've seen a rise in uptake of UPI in tier 2, tier 3, at least that's what media reports tell us. But we don't have any systematic disintegrated data on, tier-wise or gender-wise or, state-wise take-up, not that we know of. UPI. So I think that was just the starting point that as to we see the rise in numbers, but we really wanted to look under the hood to see what is contributing to that rise. That's one and perhaps the smaller part of the story. What we have also seen in the last 2 years is UPI itself evolve and grow into something bigger than itself, right? It wouldn't be like too much of a hyperbole to say that it's probably becoming the vehicle for digital financial inclusion with so many other add-on services, savings, mutual fund, FDs, and all of that now coming onto like UPI platforms. So we really wanted to understand what is the relationship of the underserved with this platform. A lot of work has already gone into understanding what is the relationship, the barriers that people face in, let's say, interfacing with a bank or moving to a branch or issues with agents. But what is this platform and what is the opportunity and what is the kind of barrier that this one is bringing along with it? And I think that's what really got us excited to think about. It'll be really interesting to see how are people interfacing with this and how that can then provide a new kind of frame of reference to understand, their financial decision making, thinking, all of that. So, long story short, we didn't know much and we wanted to.
Amazing. I think that's a great, perspective on why the study was started in the first place. So something that you mentioned right now, and also some of your reports that I've read. I wanted to know a little bit about the cohorts that you all sampled. So apart from being constrained users of fintech products, what were the characteristics of your sample cohorts?
Our cohort mainly consisted of constrained or new to UPI users. And by that, what we mean is users who have low income, who have low literacy, who have low digital literacy in sense they're not very savvy with digital financial services.
Hmm.
And we divided this new to UPI segment into three cohorts: women, migrant workers, and gig workers. And we focused on two states primarily: Kerala and Uttar Pradesh. The reason we chose these states was Kerala was ahead in the digital penetration index, and UP was a little behind. And within these states, again, we picked two districts which were digitally forward and digitally lagging within those states. Um, and these cohorts were again different in terms of how much smartphone ownership they had, what the household dynamics were, how much income they had. And if I had to go into those specifics, we see that the annual household income in this in our sample of about 262 respondents was between 27 to 57,000, and it was usually the gig workers that higher annual household income towards 57,000. Almost all the and gig workers in the sample kind of are educated beyond the secondary level or high school level. And most of the migrant workers did too. So I think overall the level of education was pretty high in the sample.
Hmm.
Half of the women were employed, but all the gig workers and migrant workers were employed.
Hmm.
In terms of their engagement with bank accounts and digital services overall, I think all of them had a bank account and all of them owned a smartphone.
Hmm.
Uh, but about half of the women, they received their money through online or through a DPA. But we do see that about 50% of migrant workers and gig workers did.
Hmm.
I think finally, in terms of household decision making, I think this is kind of important going into how it played out in affecting how they took up or adopted or used digital payment apps. We
Hmm.
see that about half the respondents, half of the women, half of the migrant workers, half of the gig workers made decisions about the LPG at home, like the gas cylinder at home or household finances in general. And we do see that at some points that that affects how they use you.
Right. The methodology sounds very robust. So what you're telling me is two states, three cohorts, multiple other variables on smartphone ownership, bank account access and ownership. All of these were considered while, doing the sampling and the, end study and survey. Uh, this is great. So, one of the questions that this, naturally comes after understanding the sampling process is we have three cohorts. So, in terms of challenges, what were the unique constraints faced by gig workers versus women versus migrant workers? And which of them did you focus on during the study? And my tag along question along with that is that given the context of this study, could you tell me a little bit more around the findings regarding how digital payment tools were perceived by the cohorts and what were the behavioral dimensions related to these digital payment apps?
Thanks, Monami. I think so. Like I said, we were actually kind of interested in understanding the overall experience that these cohorts had with UPI. So I think the way we designed the study and also lots of kudos to the CSBC team for kind of bringing on that behavioral lens. What we
Mm.
wanted to do was there was a larger quantitative survey where we kind of teased out some initial hypotheses about, for instance, the question you asked, perceptions. Why would people choose to use or not use?
Yeah.
What is the frequency of usage? Some of that. And then what we try to do is kind of build up on those reported responses or reported preferences through a user testing, right? And to kind of see that there's one perception that people have of their relationship with UPI, but how does it pan out when we actually request them to make a few transactions, and then we kind of get to observe as, an outsider in view. So, and that kind of is important, because then that adds a lot of color to the challenges that we were able to observe, for instance, right? Because at the reported level, for instance, many, and this is an overall finding, right? Many found or many reported that the interfaces were quite intuitive, and it was easy to use, etc. And then when we kind of moved to the user testing stage and we switched their app to the one that they had used lesser of, we realized that people were at a loss of navigation, right? And a lot of that, which was being called as intuitive or easy, was actually rote learning, or just learning iconography and learning like 2 or 3 dominant transaction types. So I
Right.
think overall, it just gave a lot of perspective. But if I had to answer your question summarily, and I think we kind of come to that in detail as well in the later part of the conversation, but the difference does show across the 3 groups. So as is kind of obvious to an outsider that a gig worker is kind of most well versed with the digital payment app because they use it that much more frequently. And therefore, we see that they are also the ones who report the maximum number of grievances. They're also the ones who make the most number of transactions. Their transactions are also most varied in nature, in that it's merchants, it's peer to peer. Sometimes it's also not tethered to close proximity, which is, for instance, a dominant feature that we found in women transacting, that they tended to transact more with people around them or people they knew. Right. So I think that the more fluent or the more someone's job exposed them to digital payments, it affected the frequency of use, it affected the nature of use, it affected their ability to raise grievances. And it also kind of gave them a voice to say. So, for instance, interestingly, and this is something that we haven't been able to square the circle on. So, we'd actually offline, we could talk about this one. But in our sample, what we found was gig workers were the ones who reported that they find DPAs hardest to use, and they were also the ones who were using it despite finding it hardest to use, right?
Right.
But for other groups, for instance, for women, we found that there was a lot of internalization. And, the belief was that, hey, had I been educated, I would have done this way more quickly, right? So there was never a thinking that the app is not designed well. There was a lot of internalization and self-limiting belief that, if I knew more, I could have done it.
Yeah. The problem is
Right.
with her.
So I think, yeah. So I think we saw these very interesting nuances, especially in the user testing and the
Right.
long interviews that followed user testing. So
Right.
just to kind of leave you at that, the tag along question is also quite interesting, I think. Perceptions. So we tested for about 2 or 3 things in our explanatory variables. Underlying all of this is obviously our classic regression, right? Okay, when will we stop using regressions? I don't know. Cool. But underlying all of this is classic regression, where we wanted to see what is uptake determined by people's perceptions, behavior, transaction failures, and bunch of demographics that Shubha just told us about, right? And in perceptions, if I had to call out 3, then I think the overall risk perception is low, at least reported risk perception. So people don't perceive UPI transactions to be very risky. And for instance, most encountered transaction failure is downtime. Now, the customer or the respondent cannot really distinguish between system downtime or app downtime. So we don't know at which level, but apparently it's downtime. And they have created a work around it, right? They know that if you reboot the system or you just wait for 10 minutes, the transaction will get reversed. So they don't panic. And therefore, that account, their risk perception is quite low. But there are some elements that do kind of still induce a fear of losing money. So, for instance, there is no resolution in the system if I send money to an unintended beneficiary, either a fraud or someone I knew, but I just kind of, made a happy mistake typing and sent it to someone else, right? So there's no kind of systematic solution to that. And you just have to rely on the credibility and social collateral to kind of get that money back.
Right.
And those kind of situations did kind of, induce some fear of riskiness or some loss aversion there.
Right.
So overall risk perceptions were low. Even to the extent it's generalizable or to the extent it's extrapolatable, in our small sample, we found that women had a slightly higher risk aversion than, say, other groups, right? So that's kind of one kind of perception. The other kind of perception, which is a no-brainer by now, I suppose, is just the massive convenience of UPI, right?
Mm.
Immediacy and not worrying about carrying the exact change and kind of security from theft.
Mm.
This was such a big response, which perhaps I think I was a little blindsided. I did not expect this one being such a big reason, but when we went to the field, just the whole fact that, your cash is safe from theft now that it's in a phone was
Right.
huge on people's minds. So the reason for uptake that way is quite clear. And
Mm.
then the third one was this mixed kind of reaction towards uh, ease of use, right? So
Mm.
one is that there is a clear value add that it makes life easy. But
Mhm.
how easy is the app itself to use? I think it was a mixed bag.
Mm.
The reported preferences were that it's quite easy, but like I've already discussed, when we put users through different, use cases, for instance, if you had to raise a grievance, many could not navigate to the help button.
Mm.
Or if they had to kind of check a balance, many could not. In fact, we were quite kind of riddled when we saw that overall national level, so many bank, check balance transactions happen. But in our sample, I suppose it was the migrants who did some bit of it. But
Yeah.
generally, the whole checking balance on UPI was quite low or absent, right?
Mm.
In fact, people were kind of afraid to try new features for
Yeah.
the fear of not getting adequate redress.
Right.
So they just stick to like known people, known transactions, and everybody had an intuitive ceiling.
Mm.
So, for instance, people were like mostly comfortable transacting between 2000, which I think is a big ticket size,
Mm.
but between 2000 and 10,000.
Mm.
And if you raise the stakes a little bit and say beyond 10,000,
Mm.
and then they'd be like, no, I'd much rather do it in person.
Yeah.
So that's the overall rounded perception that we got about around
Wow,
usage.
there's so much to unpack here. One, on the methodology perspective, I like how we've more than regression, we've gone to, more of anthropological and design term thinkings and all of those, because which ties into user behavior and product features and all of those things. And there is really so much to unpack between one cohort versus other cohort, how they've been using this. I think what you're trying to tell me is when it comes to one call to action of sending money, I think that's what people are very easy with, and they're kind of confident with that. But when it comes to other CTAs, it's just like we don't know where to go. But it's amazing how, this conversation was so different in 2017, 18, and now in 2023, the conversation is completely different where risk perception is lower because there's higher trust, there's higher confidence, but conditions apply. This is really nice. So my next question is around one of those old financial inclusion questions around, lack of adoption of digital payment platforms by various cohorts. So in your study, can you tell me what were the reasons for low adoption of digital payment apps among various cohorts? And if there were any preferences between various DPAs or digital payment apps by few versus the others?
Yeah. So I suppose in terms of adoption, or low adoption or non-adoption, the dominant reason was that not having a smartphone, right? And that's like the system level barrier.
Yeah.
And if we kind of put that aside, then there were two other kind of barriers, which is lack of trust
Mhm.
and fear of loss of money, right? So those are kind of reasons why people. So we had about, and I think Shrikar can say more about this. We spoke about 262, excuse me, users and about 100 non-users, 98 non-users. So
Mhm.
this data is coming from the non-users, and non-users could either be people who have never used it or people who used to use it and then kind of weaned off.
Okay.
And the big reasons there is not having a smartphone. And once you kind of keep that aside, lack of trust or the fear of loss of money. I'll just kind of leave two interesting anecdotes and then invite Shrikar in to kind of chime in on his take on adoption because he looked at all the behavioral side of things. Just on non-adoption, two interesting anecdotes that resonate with me are, for instance, that once we met this person on the field, and the reported experience was that they tried onboarding onto, say, X DPA, and the onboarding journey was unsuccessful, and they never kind of went back to that DPA, right? So the first experience, if that itself is unsuccessful, it's highly unlikely that person will try UPI again or maybe they will, but they will never try the same provider again. Right. And this also is kind of confirmed by industry level sources where they said that if someone is likely to have like a failed onboarding journey, then unlikely to return for at least 6 months. Right. So I think a lot of that, the first journey makes or breaks it for some people. And then there's one other person, and I'll leave you at that one. And their experience was that they were using UPI and then they kind of lost money to frauds. And that made them leave UPI for good. Right. So I think if we had to take away one system level finding, then that would be that the anchoring effect to a misadventure is a lot more than all the transactions gone right. And I think that's a lesson that all of us must kind of think about at a system level as to how do you set that A right. But I think in some, if I had to talk about non-adopters, then that would be all. But
Yeah, I think that really sets up how or why people prefer certain apps and which ones they adopted. So we kind of approach this question in two ways. One is to see what motivates them to use a digital payment app in the first place. Is it something coming from inside, something intrinsic? So is it that they believe that it's for their own good, if they find it helpful, or like, if it's helpful for them to do different things that they want to, or simply if they find it fun to use it. And we kind of I think, strongly found that it's actually that people use DPAs in general because they find the need in themselves on their own to kind of use a DPA. We contrast this with also asking them if there is any extrinsic motivation for them to use it. And by that, we mean, do they use it because they get some form of cashbacks or rewards from using those payments? Or if they feel like they have to or they should use a DPA because somebody around them is using it or because somebody is asking them to do it. And we see that these external factors kind of play a bigger role in this sample. But what is also interesting is that maybe one of the reasons this was happening is because a lot of the respondents we spoke to told us that the rewards that they get are often inaccessible, that they don't really find them relevant, and that they don't know how to redeem them. So we do see this very strong self-motivation to use DPAs. But when we try to inquire why they choose one particular app, so we did this study keeping in mind about all the different TPAPs that are out there. And we wanted to understand what's making them choose one TPAP over the other. And we kind of come up with 4 factors. And one of them, I think Beni has covered in good detail. This is the trust in the DPA. In terms of how safe they feel that DPA is, whether they think that there are a lot of frauds happening on it, so on and so forth. And the other 3 kind of spread into group-wise results again. The first big one, and this is seeing other people in the community, seeing other people in the social network use a particular DPA, and we see this mainly with women. So if a woman sees that, generally, I mean, if a respondent saw that there are many people in the same community that are using one particular DPA, they kind of go ahead and take that one. And we also see this interestingly in converse. So if we see that in the community, a lot of people are experiencing frauds with one particular DPA, this respondent also tended to like move away from it. And the second big factor we see is the ease of using the app in terms of whether they think it's drawing a lot of effort from them or not. And this we mainly see with gig workers. And again, it goes with what Beni was saying earlier about how this cohort finds or perceives ease of use of apps. And then the last one is not facing any transaction failures. And interestingly, again, it's probably a little self answering here, but we do see that gig workers care most about this factor that, by using this data, I need to make sure that there weren't a lot of bad experiences or transaction failures in the past. And that probably goes to the fact that they've been using DPS so often that they need to be seamless. But I think these were the 5 factors that we were able to like delineate when it comes down to what makes them choose a particular.
So, what I mean, when you said that they prefer to use a DPA that their network is using, I'm just thinking it pure influences over and above interoperability. So I don't care what you have, I will use what you are using. I mean, I don't care if the system talks to each other, I'll just copy you. And the other point of yours, Beni, around, the lack of adoption and losing them at the onboarding journey is very true, because I think even there are other studies which says that higher you go into the app and into the, using the app step by step, and the more steps you're able to, complete successfully, the more trust you build. But because onboarding is number one, I think if you lose trust there, you just fall off, and then comes KYC, and that's just another conversation altogether. But really interesting insights. When you were speaking, Srikara, one other question that I really thought of is, you spoke a little bit around why is there low adoption, the problems of trust, etc. Um, when we talk about the cohort that actually use DPAs, what were the need for them to use it? Like, what kind of use cases did they use the DPAs for? And any insights around that?
Yeah. So again, I think because of the whole challenge with, when we went deeper into how people use GPS, we did see that they face a lot of trouble exploring deeper features. So what we found in terms of what they use is also kind of limited to what's on that front page. So the primary kind of functionalities we saw is making payments to kind of friends and families or merchants.
Yeah.
In some cases, we did see that respondents were paying bills through the DPA. And we saw that migrant workers specifically kind of used it a little more to also check their bank balances. But when it comes to other features, including maybe say, including when you try to understand if they can access transaction history on their own, or customer care, or other kinds of features, it be ticket bookings or other financial services, all of these were kind of left unexplored because they were either concealed, or it needed some more navigation, or it wasn't a part of the onboarding they kind of received from their friend or family member when they first went onto the app. So they kind of limited themselves to those first few functionalities somebody showed them, and that was that.
Got it. I have one added question to this is, were the cohorts also using cash, and was it like a 50-50 division, or were they only using DPAs when it was, there was no other way to do the transaction?
Um, So the cohort that we spoke to, they did not. So it was interesting because they said we do trust DPAs more than cash because it's easier to kind of manage change, it's safer because there's no theft, it's all password protected. But we do see that when they try to make a transaction through a DPA and it doesn't work because there's a network downtime or because of some other reason transaction doesn't go through, they then resort to cash.
Got it.
So we do see that we're making these P2P payments, or, a payment at a store with a QR code where they feel safe and trustworthy. They do use DPS, but they
Right.
also do rely on cash for any reason.
Right. So the first preference has shifted to DPA from cash, which was, the other way around a few years back. And one of the reasons, and I'm just hypothesizing here, is the fact that they don't check their balances. I think, as people in this room, they will probably came from a user journey where we were checking our balances on the bank's mobile app. And we're like, okay, now we will check balances where we spend from. So that shift is not visible in these cohorts, probably because they were not using a bank app before, using a UPI app. It could be one of the reasons. I'm kind of guessing here. So
But I must,
yeah, sure. Go ahead.
I need to caveat here that when we did the usability testing, it was more about how they would approach an app that they're not used to. So it could be that the newness of the DPA was a little difficult, where they couldn't really check balance over there, or they didn't know how to navigate to these ones. But that's also what we think might happen if somebody is approaching DPA for the very first time, no matter how much they prefer it. So that's just one caveat.
Okay, got it. So quickly, would also like to understand that in terms of challenges, what kind of challenges that did this study uncover when a user was using a DPA? I think some of it is we've already covered, but if there's anything else.
Yeah. No, so just to kind of sum up, right, there are a couple of, I want to say, mental priors, and there are a couple of system issues, right? So mental priors are, like Shrika was telling us, just information asymmetry. So for a lot of people, they are kind of introduction to a TPAP or to a DPA or a digital payment platform is through someone who's already using it, right? So it's not like there's a formal kind of introduction, and it's not like there are a lot of in-app resources to show, how you can make this transaction or that transaction. And therefore, the knowledge that gets passed on kind of filters through, and only like select use cases make it to people, and it takes them a while to kind of figure it out on their own, right? So there's this lack of knowledge. There's also, and that's just lack of knowledge about the app, but also lack of knowledge about infrastructure or the ecosystem itself, right? So for instance, one person we met, and they were shortchanged. They were supposed to get 500 rupees. Someone gave them 425. And their assumption was 75 rupees is just a transaction charge, right? And for a person like that, we can imagine what is going to be the repeated use of UPI. I mean, the perception is that it's pretty expensive, right? So I think there's like lots of lack of knowledge, not just about modalities, functionalities, but also just how the ecosystem operates. And that's one big challenge that we should kind of be mindful of. And the other two that I've already spoken at length about, just the limiting self-belief, right? That it's not created. People's own perception of themselves as digital immigrants and the unwillingness to believe that something could have been created for them. And I'm not saying that this is 100% relevant to them and it's 100% created keeping them in mind, but even that whole journey that they have to take for themselves, that I could belong to a digital place and I could be native, and education is not so much of a barrier if you come to think of it. I think that's important. And the whole cognitive overload that Shrika's already told us about, that it's not that they really understand the logic of the app, it's rote learning. And why that's important for providers perhaps is because you could have like the best incentives, but if someone feels that they can only work in the environment of this app and not the other, you've got a sticky customer, right? And that stickiness is not coming because of a better user experience, but because now they have familiarized themselves and there is this learning curve that they're unwilling to take in terms of moving to another app. So I think a couple of like mental priors. And if I had to call out system level, then it's just the kind of, how do I say, lack of confidence in grievance redress, right? So people know that whenever there's a transaction failure, it will get reversed. Although I want to kind of double underline that in our study, we found turnaround times to be way higher than the RBI stipulated 7-day turnaround times. But people had figured it out for themselves that they would get money back if it's a transaction failure. But for all the other kind of use cases, redress is practically absent because the system cannot adjudicate, the system cannot enforce. And I think that really limits people from then kind of venturing out and trying out new things or making new different kinds of payments.
Got it. So in the interest of time, I'll quickly move to my last question. 2 minutes for that. What are the future plans in terms of, conducting more usability tests or understanding the design principle to build a more inclusive and customer-centric digital payment app architecture?
Yeah, so I think we're trying to do two things, Monami, here, and really just trying to create groundswell around it, talking to people like you, but also some people in the industry, SROs, hopefully in the future. One is just on the design side, what can we do, right? So, for instance, Srikara has already started looking at the whole grievance redress journey and how that might be made equal, right? And that's literally just a design workshop. It's a design project. But can we also, as an industry, create some consensus around meaningful friction, right? If a number appears to be fraudulent, then some providers may say, hey, the number appears fraudulent. Others might not because there's no kind of industry standard. Or even your point around interoperability, right? So we don't know if it's social network beating interoperability or if it is the lack of awareness around interoperability, which is kind of disguising as social network, right? And on that account, we've seen a lot of kind of providers now advertise interoperability. So there are a bunch of like just design, communication, awareness generation things that we want to follow up on. And we've already started like Shrika's grievance redress work. But there are some more system level things, right? So for instance, there is no kind of common shared knowledge of fraudulent numbers within the system. Or there is no common protocol that if you have received 100 number of complaints from this number, then perhaps you introduce a friction of 3 seconds and you ask your customer, this number appears flagged. Are you sure you want to proceed? Right? So there needs to be like a lot of industry consensus because after all, immediacy is the competitive edge, right? And if you're introducing friction, then there are bound to be losers if everybody doesn't do it collectively. So I think there's some system level grievance redress. How do you make it more meaningful? And on the design side, how do you make the journey to grievance redress more easy? So I think working on both levels, but really just still soaking up the results from this one and seeing what the best ones are. Yeah.
Right. That's amazing. And I'll link it for all our viewers and listeners, the report that's out there and any future work. I can come back and link it when it's out. But thank you so much, Beni and Shrikar, for an insightful discussion. I mean, it is pretty clear from this discussion that this is the time to start building digital labs for financial services that are inclusive, user-friendly, customer-centric, and particularly more so for the constrained and non-digitally native users. So to all our viewers who can also now listen to this conversation on our D91 podcast on Spotify, Google, and Substack, please go ahead and subscribe and you'll hear from us soon. Till then, see you next time. Bye, Shrikar. Bye, Beni.
Thanks for having us. Thank you.